Okay, 30 seconds more and the listing will come through. But we also have Siddharth who joins in, who tracks that particular stock. Siddharth, morning. First, some thoughts on what kind of listing gains would you expect on this one?
Yeah, morning, Sonia. If you look at the issue price, what was decided at 225, I think it was quite attractive. And if you compare to what other private sector banks has been trading at, then there is quite a big gap between RBL and the listed players right now. So while it will be not fair to exactly do it, but possibly 20% kind of gain is quite on the very first listing is expected, I believe.
24% higher right now on RBL Bank, 279.85, 279.55. Now keep in mind, for today you'll have a circuit from the pre-open rate as well, but 25% looks like a good opening for RBL Bank. The big question is, can it move on from here? Siddharth, good morning. So that's the next big one. Is this a compounder like say Yes Bank was, or is this going to be one of those where there's too much promise and not too much of delivery? What's your initial thoughts?
See, what I believe is that if you go and check their history, when the management took over the affairs of the erstwhile Ratnakar Bank, it was pretty small and one of the just another bank and not really focused on any particular direction. And ever since the new management has come in, there has been a phenomenal growth, almost kind of 50% CAGR for the last 5 years. Now, when the base was pretty small, 50% was quite possible. But now they have from a less than 2,000 crores of loan book, now they are close to 21,000 crores of loan book. Now, what I believe is that here onwards, say 30 to 35% kind of loan growth is something we want to see from the bank, and that is very much doable given the still low base of the bank. Now, if you come back to the management bandwidth, a bank needs capital and certainly the intention to grow, and now this IPO is giving them the capital to grow, and there is a strong management at the bank which is going to drive it. So I believe that it is really a growth story for next 2-3 years, and after that possibly the growth can taper down because of obviously a high base, not because of the lack of credit demand. Now, if you come back to the earnings point, if you just go back and check their last 3-4 years history, the management has invested heavily in the capex, both in terms of branch expansion and employee addition. So that has taken a toll on the cost to income ratio of the bank. Now, if you compare to any other private sector banks, RBL's cost to income ratio is at a much higher level. It was almost 58% for FY16. So there is enough scope for this cost to income ratio to come down, and certainly this will add to the ROA and ROE going ahead. Now, another point what I like about the bank is that they have, despite very aggressive growth, they have really been able to contain their asset quality at a much comfortable level, and really which is at par with the new generation private sector banks. The GNPA was less than 1% for your FY16. Now, as long as the bank is really able to contain their asset quality and credit cost below 60 basis point, I think there won't be any negative surprise in the earnings, and that should really help the earnings growth momentum on. And see, my rough calculation is that the bank after considering some cost reduction both on the interest cost as well as the operating cost side should be able to hit a book value of somewhere close to 130 for FY18. So I think even at the listing price, I think it's quite decent at this current level, and I believe that it has the potential to trade somewhere close to 2.5 times on a forward earnings forward book value basis. So I see a lot of potential going ahead also for the bank.
Okay, so 2.5 times on a forward basis, still steady state for RBL Bank. Currently it's around 280, so that's a gain of almost 24% odd. Siddharth, just one final question before we let you go. RBL Bank looks extremely mouth-watering for a lot of retail investors because they've learned from what Yes Bank has done. I mean, the kind of value that Yes Bank has created for retail investors in the past. So the expectation is that RBL Bank could become the next Yes Bank. Over the next, say, 2 to 3 years, what kind of value do you think the stock can give a retail investor who buys now post-listing?
See, what I can say is that the bank has all the ingredients to become a meaningful player in the private sector space. Okay, so now there is a case for strong earnings growth with stable, management at the top end. So I believe that it's a story for multiple years. So it could mimic the earnings growth, and possibly re-rating can happen subject to your improvement in ROE. One point to be noted that because of high cost, RBL has seen compression in ROA and ROE. So their ROE was somewhere close to say 11.5% for FY16. So as and when we see improvement in ROE, possibly the multiples can change. But I feel that around for next 2 years possibly we'll see marginal improvement in ROE. So I'm not expecting multiple change here onwards. But certainly, if the bank is able to close to 14-15%, down the line also, then possibly it can be a very good story. But who are still those who have got allotment and want to hold it on to the bank, I think it's a good strategy. They can expect decent return for on a compounded basis for next 2-3 years. So I'm confident about the growth structure for the bank, and there is not much to worry about the performance of the bank as of now.
Okay, Siddharth, thanks a lot for your time. That's RBL Bank, still with 23% gains. Of course, we'll talk to the management in a bit. For now, we'll take a break with the news that the market is still stable. The Nifty is up 0.5%. The Bank Nifty is up